So picture this. Before a crypto token ever even reaches a public exchange, it passes through this crazy hidden world that almost nobody sees. We're talking a completely hidden ecosystem filled with private deals, ironclad NDAs, and closed doors. Most of us only hear about a shiny new project when it finally hits the public market. But honestly, by that time, an entire life cycle has already played out in the shadows. Welcome to today's Explainer. We are officially pulling back the curtain on the pre-launch crypto market to show you what's actually happening behind the scenes, who's getting access, and the very real dangers lurking in the dark.
All right, so what really happens before a token goes public? To get this, we've got to totally reframe how we look at launches. The public launch of a token, that's not the starting line. It is actually the finish line of a really long, incredibly quiet race. This pre-launch world is a massive, hitting stage of the market. It's packed with private sales, strictly invite-only communities, and these specialized platforms where early players get in way before the general public even hears a whisper of the project's name. It's not just about buying early, right? It's literally an entirely different phase of the market. It's got its own rules, its own pace, and a totally unique set of players.
Okay, let's dive into this. Where does this secret ecosystem actually live? Basically, it's hanging out in 4 distinct arenas. First up, private investor networks. This is where VCs, venture capitalists, and angel investors are hammering out deals directly with the founders, usually under strict NDAs way before any public announcement drops. Second, we've got invite-only launchpads. These are platforms that gatekeep early access. You usually have to hold a bunch of their tokens, hit certain staking tiers, or even pass a rigorous application just to get in. Most everyday users literally never even know they exist. Third, niche community channels. Think super specific, gated Discord or Telegram groups where teams hand out early access to their hardcore fans. And finally, OTC, or over-the-counter desks. These are basically informal, off-market networks where early insiders sell pieces of their allocation directly to other investors, totally bypassing the public market.
Now, you might be wondering, if there is so much money and activity moving around here, why is it so heavily gated? Why does this whole world stay completely hidden from the rest of us? Well, it's actually not an accident. It is a fundamental feature of the system. Let's put on our detective hats for a second and figure out exactly why this intense secrecy exists.
It basically boils down to 2 main things. On one side, you have regulatory frameworks. Look, historically, and not just in crypto, but across finance, early-stage investments have been strictly walled off for accredited or institutional investors. It's all about complying with these really complex financial regulations. But on the other side, you have intentional limits set by the crypto projects themselves. Founders actively restrict early access. Why? Because they want to control the narrative, they want to dodge early regulatory crosshairs, and they want to make sure they're heavily rewarding their earliest, most committed supporters. And honestly, creating this kind of artificial scarcity, it's a brilliant marketing strategy to build massive hype right before they go public.
And this brings us to kind of a harsh reality of the space. Information rarely reaches mainstream financial media until after the fact. Seriously. If you want to find these early opportunities, you can't just casually sip your morning coffee, read the news, or scroll through standard social media feeds. No way. You have to be deeply embedded in these very specific, niche crypto communities. Mainstream media usually just reports on the spectacular aftermath of the pre-launch phase and completely misses the actual phase itself.
So, let's map out exactly how this builds into the timeline of a crypto project. It might actually surprise you to learn that pretty much every single token you see on a public exchange right now likely walked this exact multi-step path long before you ever had the chance to click buy. It is so easy to look at a chart on launch day and think, oh, this is day 1. But in reality, years of work and millions of dollars have often already changed hands.
Here's the actual chronological journey. It kicks off with stealth development. The team is building quietly, often without even whispering the word token publicly. Next is private or seed funding. This is where select insiders fund the project at a ridiculously early valuation. Step 3, community building. This is where the project starts engaging a super niche audience. Think testnets, points programs, or private beta testing. Step 4 is the public or semi-public sale. A broader but still really limited group gets access here, often through those launchpads we talked about. And finally, we hit Step 5, the TGE or token generation event and the big exchange listing. This is the exact moment the token becomes available to everyone and mainstream awareness finally explodes.
So, why jump through all these insane hoops, right? If you have to scour deep Discord channels, pass strict background checks, or lock up thousands of dollars just to get access, what's the ultimate prize here? Why are early participants so eager to take on all this risk?
Well, the biggest draw, obviously, is a much lower entry valuation.
Insiders are looking to buy in for pennies before public demand drives the price up to dollars. But it's definitely not just about the price tag. Early participants get direct, one-on-one access to the founding teams and their roadmaps, which lets them really dig into the tech. They also gain huge community status and early governance influence, meaning they literally help shape the project's future. Ultimately, they're positioning themselves for the possibility that the project just explodes with massive traction post-launch. But really listen to my phrasing there. I said the possibility of traction, absolutely not a guarantee.
And wow, that brings us to the absolutely most critical part of today's explainer. Because this world operates in the shadows, it is incredibly dangerous. Scams absolutely thrive in secrecy. If you're a beginner, that alluring promise of exclusive access or a secret pre-launch is frequently and viciously exploited by completely fraudulent schemes designed to perfectly mimic real private sales. You have got to play incredible defense here.
So the crucial point is really understanding the mechanics of the risk you're taking, starting with this concept right here, illiquidity. In the pre-launch world, your money is very often trapped. That's illiquidity. It means your capital, or the tokens you bought, are completely locked up for extended periods before you're legally allowed to sell or trade them. You might look at your wallet and feel like a crypto millionaire on paper, but if you're stuck in a lockup period, you can't sell a dime. You are literally just staring at numbers on a screen, totally stuck, waiting for an unlock date that could honestly be years away.
And beyond just being illiquid, the harsh realities pile up fast. There is a massive lack of transparency. Since there's way less public info out there, doing proper due diligence is insanely difficult. Plus, again, there is zero guarantee of success. So many pre-launch projects completely fail, or they radically pivot their entire business model, or sometimes they just never officially launch at all. On top of all that, you have to deal with regulatory gray areas. Private token sales exist in this weird legal limbo that varies wildly from country to country, and it's constantly shifting right under our feet.
So we really need to demystify this space. Yes, the pre-launch phase is a very real, very important stage of the crypto market, but it is absolutely not some magic wand for wealth, and it's definitely not a guaranteed edge. Too often, beginners fall into this trap of thinking, hey, if it's hard to access, it must be extremely valuable. Not true. If you are going to explore this hidden ecosystem, you've got to leave the hype at the door and learn how to navigate it responsibly.
To actually protect yourself, you need a strict, non-negotiable checklist. First off, realize that secret or exclusive framing, that's usually just a marketing tactic designed to trigger your FOMO. You have to verify the team's identity, check their past track record, and look at the actual product before even thinking about putting money in. Confirm that the platform or the community hosting the sale is highly reputable and not just some fake pre-sale spun up overnight. If you do decide to jump in, treat it as a high-risk gamble that makes up a very, very small portion of your broader portfolio. It should never be your primary strategy. And above all else, literally the golden rule, never share your private wallet keys, and never ever send funds just because someone in a chat is pressuring you with a fake sense of urgency. The hidden world of pre-launch crypto is undeniably fascinating, right? But it demands extreme caution, intense research, and honestly a really healthy dose of skepticism. If you found this breakdown helpful and want to learn more, definitely subscribe to the channel. And hey, drop a comment below letting us know if you'd want a follow-up explainer on exactly how to spot the legitimate opportunities versus the outright scams in the pre-launch space.
Finally, please remember that this explainer is strictly for educational purposes only. It is not financial advice. Pre-launch crypto is a highly volatile, completely opaque environment, and it can absolutely result in the total loss of your capital due to illiquidity, a project failing, or just outright fraud. Always do your own independent research and seriously, never invest more than you can afford to lose. Look, the hidden world of crypto is full of potential, but it is also full of predators. The real question is, are you willing to put in the hard work and the light before you step into the dark? Thanks so much for joining me for today's explainer, and stay safe out there.